Here's the thing. This isn't going to be obvious until it's over. The people who are going to come out of this next cycle way ahead, well, they'll look like they just got lucky. But luck is what it looks like when you prepare and you have the right timing. And right now, the timing's perfect. We're not at the peak. We're not even at the frenzy yet. We're at the early recognition stage where most people are still asleep. They're still trusting outdated advice. They're still betting on things that don't work anymore. So this is our window. This is our time. I like to say that the future is not evenly distributed. But the old system, it's not going to come back. No one's coming to save your portfolio but you. But if you get this right, you could turn this shift into the most important financial decision you've ever made. And I hope you do, because this is only just getting started.
Most investors are walking straight into a financial trap, and they don't even know it yet. By 2026, many portfolios could be wrecked, not because of inflation or interest rates, but because the system itself is breaking underneath. Passive index strategies that were once considered safe are now some of the riskiest plays on the table. Because of AI, too much weight is now piled onto the same handful of tech stocks, leaving the entire market exposed if those names start to fall. But in the middle of all this chaos, Moss sees where the next real wealth wave is building: Bitcoin. Not crypto, not altcoins, but Bitcoin specifically. While passive investors stay locked into failing strategies, Moss argues that positioning into Bitcoin early could be the smartest move anyone makes before the next disruptive cycle fully plays out. Let's now hear from Mark Moss as he explains just how disruptive AI has become and how to position financially before the damage spreads further. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Let me show you how AI is breaking the system and why the old models don't work anymore. And even more, why the old model is even more dangerous than most people realize. And the reason why is because it's not just the index that's broken. It's the entire system. The entire system we use to value companies is also broken. And the reason why is technology. Technology is changing so fast. We have AI moving so fast, it's making traditional valuation models almost useless. The tools that Wall Street uses to price companies, like PE ratios and DCFs and EBITDA multiples, all that. It all assumes some version of linear growth, like steady revenues, growing margins, predictable performance. But that's not what AI does. AI isn't linear. It's exponential. It doesn't just make things better. It makes them cheaper, faster, and more scalable. And it makes them do that in ways that the old models can't predict. Like think about it. You've got companies now with, say, 20 employees doing what used to take 200. Because all of a sudden, AI automations do so much of that work. How do you price that? How do you model productivity when it's doubling every 6 months? Well, you can't. Wall Street hasn't been able to figure it out yet, and that's why markets feel so jittery. And then, of course, you get DeepSeek. They spent, again, $6 million to build a model that beat or matched OpenAI, and they did it in just 2 months. Meanwhile, U.S. companies have spent hundreds of billions on AI infrastructure and compute. So when DeepSeek dropped their R1, investors went, wait a minute, is this spending worth it? That's why NVIDIA lost almost $600 billion in a single day, the biggest single-day loss in U.S. stock market history. And it wasn't just a bad day. It was the moment that people realized that we don't know what happens in that kind of environment. And we know for sure money gets scared. We know that narratives start to break, the index breaks, and you're still relying on the old models, and so basically you're flying blind. Now, here's another stat that tells the whole story. Even after all this, the S&P 500's forward PE ratio is still over 20. Now, historically, that's really high for a time when earnings are dropping. JP Morgan had cut their S&P 500 earnings forecast 7.4% down to $250 per share this year. That's a massive disconnect. Valuations are staying high while profits are coming down, and that's just not sustainable. So let's map all this out. We got a market that's being held up by a few names. Those names are tied to an AI boom that just got undercut by cheaper, faster competitors. The tools we've used to value companies, they don't work when growth is exponential and unpredictable. And most investors are still in passive strategies that are built on those outdated assumptions. So that's the setup. That's why portfolios are getting completely wrecked. But here's the thing. While most people are panicking, while most people are confused, this is actually the biggest opportunity that we've seen in decades, if you know how to position for it. Let me show you what I'm doing and where I believe the next wave of wealth is going to be built.
Mark Moss warns that the real problem isn't just inflation or interest rate. It's that the entire system used to value companies is breaking down beneath the surface. Traditional tools like P/E ratios and growth models are built on the assumption of steady, predictable progress. But AI isn't playing by those rules. Growth isn't linear anymore. It's fast, exponential, and hard to price. When a Chinese startup like DeepSeek can outperform major US tech firms with just $6 million and 2 months of work, the entire foundation holding up the biggest names in the market starts to crack. Nvidia's historic $600 billion drop was the first major sign. Yet many investors are still sitting in passive strategies built on the old assumptions, completely exposed to a system that's changing faster than they realize. Fortunately, Moss points out that even as the system breaks down, it's creating one of the rarest windows of opportunity for those who know where to look. Let's return to Mark Moss as he breaks down where the real opportunities are taking place.
Let me show you what I'm doing and where I believe the next wave of wealth is going to be built. Now, while most people are stuck trying to make sense of this new world, there's a much smaller group of investors who see it for what it really is. That's a massive opportunity. But it's not for the whole market. It's not for every stock. It's in for companies that are in very specific areas, the ones that actually benefit from the shift that's happening right now. And it happens around a 50-year cycle that's repeated 6 times over the last 300 years. And this explosion of technology that forms a cluster to build this new world, I call it the quantum wave. And it's made up of 3 core base technologies. The first one is Bitcoin. Bitcoin is the monetary layer, the asset that's outside of the system that's accruing wealth, storing value. Then we have the AI and the deep tech layer. This is the exponential growth engine that's happening. Then we have the commodities and energy layer, and this is the stuff that we build the real world foundation with it. That's it. These are the assets. These are the assets I believe that we're going to ride the next 5 to 10 years, and it's going to completely transform the globe while the rest of the market fights to survive, while the rest of the market fights to try to figure out what their new valuation models will be. Now, let me break down each one of these for you real quick. So first of all, of course, we talked about Bitcoin, the sovereign base layer. I call it sovereign because it's outside the system. And it's not just some crypto asset anymore. We're very clear. It's Bitcoin, not crypto, not the 11 million cryptos. And it's being adopted already, on a global level. We've seen it with obviously investors, up to institutions, and now, of course, the United States government. And it's permissionless. Like I said, it's outside the system. And in a world that's full of debasement and censorship and capital controls, Bitcoin's a lifeboat. Governments, they're holding it. Institutions are buying it. Individuals, they're realizing they don't need to play by Wall Street's rules anymore. I call it the cheat code. And if you're not holding Bitcoin, you're already behind. Now, the second layer, as I said, is AI and deep technology. This is the exponential opportunity. Now, we're not just talking about AI stocks, all right? This is about identifying specific companies that are building out the infrastructure, the models, and tools that's actually going to capture the value of AI. Open source players, high efficiency builders, not just the biggest brands, but the ones that adapt the fastest. This is where asymmetric upside lives. All right, you don't need 50 positions. You need 5. You need 5 that are right. This is more of a sniper approach than a spray and pray. But it's not, again, buy the sector, it's find the signal. And third, we have the commodities and the energy layer, the physical layer. And finally, we have to ground all of this in the real world. All these data centers that are running AI, well, they need power. They need a lot of it. AI is massively energy intensive. So the more AI grows, the more valuable things like nuclear and oil and gas and copper and lithium and uranium become. While everyone's chasing the shiny tech narrative, this is the part of the portfolio that gives you stability, leverage, and resilience, especially if inflation rears its head again, which it's most likely going to. So that's the framework. The quantum wave cycle is what I'm positioning in. Now, this isn't everything, but it's the right things. We're not just trying to beat the S&P 500 by a couple of points. We're trying to front run a massive rotation of capital out of legacy assets who have their valuation models all wrong and into what's next. And because this 50-year cycle has happened 6 times over the last 300 years, there's a very easy to follow repeatable framework and blueprint that we can follow. Now, each stage has a different investing strategy, and right now we're going into phase 2, so we have to shift again. Passive, it's not going to save you. Our lives aren't meant to be passive, right? You need a strategy. You need a strategy that's actually aligned with the world that we're moving into, not the one that we're leaving behind.
Instead of clinging to broken strategies, Mark Moss suggests looking at the areas that stand to benefit most from the changes already reshaping the market. At the top of his list is Bitcoin, a way to store value outside the control of broken institutions. Second is AI and deep technology, where real opportunity lies with the companies building the infrastructure that others will rely on. Third is energy and key commodities, the foundation that supports everything from data centers to industrial growth. Moss sees this combination as the best way to stay positioned while the older systems continue to break apart. What about you? How are you positioning yourself as the market keeps shifting? Do you agree with Mark Moss's perspective, or are you taking a different approach? Share your thoughts in the comments. Thank you for sticking with us until the end of the video. If you enjoyed this discussion, hit the like button and subscribe for more valuable insights on building true independence through crypto. See you next time.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.